The company behind Sobeys reported its latest quarter, which saw $159 million, down from $173 million in the same quarter last year. Let's get more on those results from Chris Kerlow, Senior Portfolio Manager and Investment Advisor at Canaccord Genuity. Chris, thanks very much for joining us today. Empire, the shares dropping right now with what's going on. Any idea what's driving it?
Just kind of a mixed bag results. The stock's kind of been in a bit of a downtrend lately, not doing too well in this post-tariff era. The grocery business in general is a very low margin business, tough to make a lot of money. So when those profits get crimped, it makes it harder to keep doing what they've been doing. It's not something that we've owned. It just doesn't screen well. We look for high-paying Canadian dividend stocks, and it's got a bleak dividend, so not a name that we own in the LWC Canadian dividend portfolio.
Yeah, so it said expenses were up, employees and wages was an issue. Does any indicators that they might be getting it under control, or is it?
It seems to be a lot of the same problems. I mean, wage growth in Canada, it hasn't subsided. It's one of the drivers of inflation. The automation and the AI productivity gains that we're seeing in other sectors just really isn't there for grocery just quite yet, probably a 2027 story. So doesn't seem like this is a buying opportunity at this exact moment. But like I said, not a name that I followed too closely just because it doesn't really fit into the criteria we're looking for.
Any in that realm in the grocery store area?
Consumer staples in general is just an underweight for us, just not a lot of companies in Canada in the space in general. It's, you know, couple grocers, cheese company, stuff like that. But so we've just been underweight staples. We benchmark more the TSX Canadian Dividend Aristocrats category, which, you know, has a pretty low staples weight in general. All
right, we're going to get to some of those stocks you want to look at, but I want to talk a little bit also about Oracle. It's down today. Your thoughts on that?
Yeah, I mean, it's part of that center of the AI universe. You know, they have the big OpenAI contract. It's been under pressure since they started raising debt to meet their data center obligations. We look closely at the bond market when, you know, analyzing the company. It tends to be a great leading indicator, and the CDS spreads have been widening out for quite some time now, even further here. And if their debt moves into that BBB, you know, high yield category, I think that could be possibly another leg down for the name. You know, legacy business that's trying to catch the wave here and just hasn't been a leader in the space.
How close is it to that BBB?
I believe it's bordering it at this point right now, just looking at it briefly this morning.
Yeah. What would it take to kind of redirect that and reverse it?
You know, I think it's just such a competitive area. It's probably late innings for a lot of these AI names. You know, we added recently to NVIDIA kind of the toll collector on the toll route of the whole data center game. You know, a lot of headway or noise around kind of the competition around the GPU space from AMD, the other hyperscalers building their own chips. But, you know, once a developer starts using CUDA in their tech stack, it's a very high switching cost. And you can get NVIDIA today the same price you could in the summer. And with their data center business growing at 100%, I think, you know, fundamentally we thought it was a good time to put a bit of chips behind that idea.
All right, so you're liking NVIDIA right now. Let's talk a couple of the stocks you're focusing on. CF Industries.
Yeah, that's when we got off actually. So we've been in it for a while. They've made some inordinate profits during 2021 to 2023 during the Ukraine-Russia problem. They're one of the largest nitrogen fertilizer companies in the world, and so there's kind of this arbitrage between U.S. natural gas and European natural gas, where they can create these products in the United States and ship them overseas. That game's kind of been fading with some resolution on that side. And so we've just rotated into Nutrien, Canadian, you know, market leader here. They do the nitrogen game and benefit from some of those tailwinds that I've mentioned, but it's a much more diversified business. They have a retail focus, obviously out of Washington, trying to support farmers south of the border. That's great for their largest output, which is potash, and so following the acquisition of Potash Corp here in Canada. And so we see that after years of kind of underutilization, that demand picking up there. So it's just kind of a pair trade into Nutrien from CF Industries.
Any concerns with Nutrien with the potential tariffs on fertilizers?
Yeah, I mean,
the mentioned tariffs, they seem to have faded away from the start of the week.
Yeah, totally. I mean, it's kind of like one or the other. Like you want to support farmers, but you want to increase the price of what they need to do their job. So I think it's going to be challenging. Canada, we're the largest exporter in the world, maybe outside of the national company in Belarus, but I think it's going to be challenging for them to lay the tariffs on that. Obviously, it's made some headlines here, but solid valuation, good dividend, screened really well. We got it in the low 70s. I think below $80, it's a very interesting name to be in a portfolio.
Okay, a couple others. We were talking about NVIDIA, but Freeport, McMoran. Is it McMoran or McMoran? I always get it wrong.
Freeport McMoran.
McMoran, there we go.
Say it real quick and no one will know.
McMoran.
Yeah.
Freeport.
So Freeport, largest copper producer in the world. Love the copper play. It's the backbone of everything, industrialization, the Internet of Things, this AI trade. We've been in the name for a while. We added to it in September when they had that mudslide at one of the largest mines in the world. That kind of slowed supply, and so we added then. It faces a lot of technical resistance here in the mid-high 40s. Mm-hmm. So we've been pairing it off, rotating into some gold names that we like. So not fading the material space in general, but just think that Freeport struggles to kind of break above $48, $50. So yeah.
And so you've been moving over to Alamos?
Yeah, great story, good visibility on them increasing production 25 to 27% in the next couple of years here. With gold stabilizing around $4,000 an ounce, it's a fantastic space. Great hedge against this U.S. currency debasement, which has been picking up steam, something we've been talking about for a few years now. Gold's been a huge part of our overall asset allocation since the summer of last year. And so with Alamos, you could see the stock kind of trending sideways there. We thought it was okay to increase we had taken profits and just kind of came back to a full position on that name.
Okay, we'll leave it there. But Chris, thank you very much for joining us. We appreciate it.
Thanks a lot for having me.
Chris Kerlow is Senior Portfolio Manager and Investment Advisor at Canaccord Genuity.